18.2 billion rand moving through the market. I haven't seen that kind of number for some time now. And the market nicely up on the day, up 0.5%, I suppose, but backing the global trend. Your thoughts on the day's trade?
Look, it's a bit of a funny day in that it's kind of the end of the month, and I know that there is quite a big MSCI re-weighting that has happened. So some shares have fallen like out of the index. I know that Telkom is one of them, one of the worst performers on the day, and then some of the companies went into the MSCI SA index, which would be Mr. Price as well as Assor, and they all had relatively good closes. So maybe that added to, I suppose, some of the volume traded, I think, in our market. And then if you just look at how the day started, you know, markets were broadly up relatively strongly in the morning, basically hoping that we'll get some good news out of US data. US GDP numbers was fairly much in line, and then some of the jobless numbers or unemployment numbers were perhaps a little bit behind expectations, causing global markets to maybe sell off a little bit, but our market to kind of still buck the trend. I think we probably did a little bit too well today, and if I had to probably take a stab, that if the current, I think, like trading trend had to continue, I think we'll probably have a negative open tomorrow when we start.
Well, some of the stocks that didn't do so well today were the big diversified miners and really limiting any of the gains that we saw on the resources front. I mean, Anglo American down 1.25%, BHP Billiton down by 1% today. Some news flow that we've just been talking about, BHP Billiton, the environmental nod for their expansion in the outer harbour port of Western Australia. But overall, right now, your thoughts on how this project fits into their overall expansion and their project pipeline?
Look, I think it certainly fits their strategy. You know, it's a large asset. It's at the low end of the cost curve. It's scalable. So it kind of fits into, I suppose, the typical BHP Billiton criteria. When they will actually start with the project, I think it's relatively unclear. You know, I think the project still needs board approval, and Marius Kloppers has been relatively, you know, has in fact been fairly firm in saying the last couple of weeks that they will not be spending the full $80 billion that they would have spent, say, a year or two ago over the next over the next five years or so. That they will take a more, say, prudent approach to capital allocation. And if you look at the Outer Harbour project, you know, it's 100% iron ore, and I think their view of the iron ore market is that steel intensity in China will still be relatively robust for the next couple of years in the short to medium term. But then starting at about 2020 or so, I think their expectation is that per capita steel consumption will actually start going backwards, which will obviously be very bad for iron ore prices. So I think if they do want to do the project, they have to probably move relatively quickly to bring forward the net present value of that specific project to maximize return for like shareholders. But I think some of the other projects like Olympic Dam, Jansen Potash, etc., those are the three big ones with the Outer Harbour, will probably be I think maybe delayed for a couple of years.
Standard Bank also coming out with a trading update for the first 4 months of this year, and the stock up in line generally with the banking sector. We did have Nedbank as an underperformer today, but what are your thoughts on those numbers that we saw? They highlight the cost to income ratio being a problem, but loan growth is, I suppose, what's really helping to fuel the interest income side of the business.
Yes, definitely. You know, I think the trading update was, I think, very much in line. No major nasty surprises. As you pointed out, on the cost to income side, perhaps slightly behind. You know, cost pressure seems to be like a common phenomenon in kind of most South African say industries. It's quite pleasing to see advances growth doing relatively well. You know, I think it's only really been the last, say, couple of months, or maybe the last year or so, where banks have, I think, become a little bit more comfortable to perhaps lend again, and that is certainly showing up in the numbers. So if I look at Standard Bank, you know, the group seems to be, I think, a lot more focused now than what they were maybe 2 years ago, when they rapidly expanded across the globe. I think they've sold most of their non-core assets, and they've made it relatively clear that they want to be a pan-African banking play focusing on their operations in Africa as well as in South Africa. So I think it's only going to get a little bit better for them. I think bad debts have stabilized, the advances book is growing, and I think on the cost side it's not all too bad. So I would expect their return on equity to start improving. It's still a little bit below the peer group. It's sitting at about 15%. I think the index, or I think the average for the big four banks is about 18. So they have some work to do, but it's certainly not the premium rated banking stock like it used to be. It has derated, and it's probably looking a bit more interesting now than say 2 years ago.
Well, 114 Rand now, but it still is up for the year, up around 14%. We're going to have to leave it at that. Thank you so much for joining us. Rhynhardt Roodt, equity analyst from Investec Asset Management, joining us from our Cape Town studios.